Purchasing a home involves securing financing, finding a suitable property, submitting offers, closing the purchase, and many steps in between. With so many things that need to be considered, this process can sometimes be overwhelming. Hey everyone, welcome back to my channel. I'm Faras Riyal with eXp Realty, your go-to realtor here in Oakville and the Greater Toronto area. In this video, I will share with you a step-by-step process and tips you need to know during your home buying journey and what it takes to purchase a home in Oakville and the Greater Toronto area so that you are 100% prepared when the time comes to start looking at properties and submitting offers. Make sure to stick around throughout the video as I will be going in detail through the 9 steps from securing financing to getting your keys to your dream home. And if you want to be alerted about similar topics and content, make sure to hit that subscribe button and turn notifications on so you won't miss out on any future insights. Without further ado, let's get rolling and discuss the 9 steps in your home buying journey. Step number 1, check your credit and your score. So the credit report and score is the first thing you want to do. This might come as a surprise to you and is missed by many home buyers. The reason you want to check your credit report and the score is to make sure not only if your score qualifies you to purchase a home, but also to find out if you have any discrepancies in your personal information, such as your name, your birth date, address, etc., or information regarding your credit accounts, such as the amount you're owing on each credit account and the utilization percentage of that. So you do not want to start home shopping and realize later that you had a missing payment in the past or high utilization of credit on an account that affected your score. This way, before you start shopping for a home, you start fixing your credit score and devise a plan to reduce your debt. Your credit score determines how much money you can borrow, what interest rate you can qualify for, and how much in fees you'll have to pay. Your credit score is based on your credit report, which includes your payment history, how much debt you owe, how long you've had credit, the types of credit you have, and how often you apply for credit. You can get a copy of your credit score and report through equifax.ca or transunion.ca. I recommend you do both, as there might be some information in one reporting agency that is not showing up in the other. The most significant change you can make in your financial behavior to help you improve your credit score and increase your savings is to stop purchasing with credit card debt. If you cannot afford something in cash, don't purchase it, even if this means you'll skip vacation this year. The only thing you're allowed to make an exception for is for things like education, your personal development, or anything that is going to help you improve your financial status. If you perceive that a course or a program can help you get a better job or a promotion, you can finance it through credit card debt. Another hack you can use to increase your saving is paying yourself first. This means putting aside the amount you want to save at the beginning instead of at the end of the month. This way you will stop purchasing unnecessary things and maintain a monthly budget. You can use a budgeting app or a simple Google or Excel sheet to help you with your budgeting. You can open a new savings account with no linking debit cards or checks that you can use solely to save for your down payment. Here are a few tips to help you remove spending temptations. Tip number 1, unsubscribe from any marketing emails you're receiving. Number 2, when going shopping, write down a shopping list and stick to it. If you have old stuff to sell, you can organize a yard sale or garage sale and put the money you earn towards your down payment. All these small things add up. Now, let's get into the down payment part. A down payment is money you pay in cash to finance your property purchase. This amount is deducted from the property purchase price. Your lender then issues a mortgage for the rest of the amount. So the higher the down payment, the lower your mortgage, your interest rates, and subsequent monthly mortgage payments you will make. The amount of your down payment depends on the purchase price. So for a property of 500,000 or less, you only need 5% down payment. As you go above 5% up to under a million, 999,999, you will need 5% for the first 500,000 and 10% for the remainder portion of the price. And once you get to 1 million or above, you will need a minimum down payment of 20%. And for those down payments that are under 20%, your lender will require an additional what we call a mortgage loan insurance or a default insurance. This insurance is paid to protect the lender if you cannot make your mortgage payments. The premiums for mortgage loan insurance range between 0.6% up to 4.5% of the amount of your mortgage. However, its calculated amount is not paid in full or upfront. It is added to your loan amount and spread over the mortgage term and blended with your monthly mortgage payments. There are different government incentives available to help you lower the minimum required down payment as well. A professional real estate agent like myself can help connect you with various lenders that meet your situation. Now we're done with step number 1. We go to step number 2, which is get a pre-approval. So the next step you want to do is get pre-approved for a mortgage. Some buyers get a pre-qualification, which differs from pre-approval. Yes, there is a difference between pre-qualification and pre-approval. Pre-qualification is less formal process involving no credit checks. It's based entirely on the documentation you submit. You can get a pre-qualification done online or over the phone. Since it's based on your documentation and not on official checks done by the lender, it's a rough estimate of what you'll be pre-approved for. So pre-qualification will give you a very rough picture of what budget you'll have at your disposal for your next home purchase, or at least a good enough estimate so you can start browsing homes online. It indicates what you can afford so you don't set high expectations. Now, the reason you want to be pre-approved and not only pre-qualified is, and before you start shopping for your home, is the moment you see a house you like and want to put in an offer without a pre-approval, most sellers will not take your offer seriously and you will be negotiating from a weak standpoint. Most importantly, you are likely to lose the house you liked. You can start your pre-approval process at your bank. However, it's recommended to shop around and see other lenders that can offer you better terms. A mortgage broker can help you find the best possible option. If you want to expedite your pre-approval process, you can ask your preferred real estate agent to help you. Most agents like myself have established contact networks with few mortgage brokers and have our own contacts within individual banks. Remember, even getting pre-approved does not guarantee you can take out the stated amount. The reason is that most banks give you a pre-approval that is conditional on other terms, such as your employment and credit report. Therefore, I highly recommend you do not alter your credit once you get pre-approved. Some buyers miss out on this and take out loans and lines of credit, continue to borrow or increase their debt after they get the pre-approval for a mortgage. Another good thing about the pre-approval is that it comes with an interest rate that is usually held for up to 120 days. This guarantees that should interest rates go up, you are still protected. It also gives you the option to choose a lower rate should interest rates go down. So it doesn't harm you to have that pre-approval ready, it does not cost you anything, and gives you that bargaining power when negotiating an offer. In the case where you didn't buy in this 120 days where you got the mortgage rate, the interest rate, you can always request an extension, though it's not guaranteed. If interest rates change between pre-approval and purchase, you must repeat the process, and in this case, your lender will likely adjust your pre-approved amount. It is not wise to start looking at homes without having a pre-approval in your hand. You risk falling in love with homes that could be out of your reach. It will then become challenging to find a property you love after seeing all those fantastic homes that are out of your budget. Now we move to step number 3, which is determining your must-haves and your deal breakers. It may seem odd to start with a list of must-haves. However, this is the best way. Ideally, you'll create this shortlist before going online to see properties. Going online and looking at properties can generate a set of false expectations of how your next home should look like. You'll find some things that objectively are nice to haves, but not must haves. However, it's hard to let go of them once you see them. Let's discover what your must haves are. The best way to do this is to focus on 3 to 4 different neighborhoods that fit your need for proximity to places that you want. For example, things like your work, hospitals, schools, parks, the number of bedrooms, number of baths you need in your home. Of course, this shortlist should also state if you need a property, for example, with a wheelchair access or easy access for individuals with different mobility issues. In addition, you need to know your deal breakers. These are criteria in your home or neighborhood that you absolutely will not tolerate. Examples could be an age or a rundown house, a rental property that has been rented for a while, a proximity to a railroad or a house where is the backing to a railroad. These are list breakers will not only save you time, these deal breakers, but will also help narrow your criteria and saves you time and your real estate agent time. Step number 4, you're ready now for online shopping. Now that you've gotten your pre-approval, determined your must-haves and deal breakers, you can start at what kind of properties you'll be able to afford. Start with a basic search using your preferred neighborhoods, the number of bedrooms and bathrooms you need, and the budget you have at your disposal. You'll now see what type of property you can afford, whether it's a new build or old, whether a detached or a semi-detached, a townhouse, or maybe a condominium. You can now expand your short list of must-haves with items properties within your budget have available, such as finished basement, if it's one of your criteria, or an open concept floor plan, a swimming pool, etc. Now let's get into the understanding of the market. You have heard terms such as buyer's market and seller's market. Here's what they mean, and more importantly, what they mean for you as a buyer. A buyer's market is one in which the supply of homes exceeds the demand. Since supply is greater than demand, properties stay longer on the market. This will give you enough time to explore a few options, even visit the properties a few times before finally deciding and submitting an offer. A genuine buyer's market means you can usually negotiate the asking price downwards, as hardly you will have a multiple offer situation in a buyer's market. A seller's market, on the other hand, is one in which the supply of homes cannot keep up with the demand. This huge demand pushes prices upwards, and you can expect to be caught in bidding wars with multiple offer situation and with other interested buyers. So this means that you'll pay more than asking price at which the property is listed for. You'll have to decide and submit your offer quickly, as properties stay on the market for just a few days. As you keep exploring what's available online, you can start refining your search with more criteria and amenities, as you have now the exact amount of money you've been pre-approved for. So this will help you, as we said earlier, narrow down your search. Here are super important tips for viewing homes online. Number 1, never max out your available budget. Always aim to be below your budget. Even if you get approved, for example, for $800,000 purchase, that doesn't mean you should buy a home worth $800,000. You don't have to buy a detached home if you can tick all the boxes with a semi-detached home. That's why the property type is not part of your initial essential must-haves shortlist. We first want to know what we can afford and then fit our must-haves into the property type fitting into our budget. Also, you might think you're buying a move-in ready home, but it's never 100% move-in ready. There's always stuff you'll need to change, fix, move, take out, or adjust, and this costs money. So always leave some space in your budget for this type of work. For your initial list of favorite homes you'd like to see, always include homes below your budget. As I said earlier, even if they are significantly below the budget, but tick most boxes. You might realize you could get a fantastic property with a lower budget. However, you never realize that such a property would work for you before seeing it in real life. When looking at photos and pictures online, make sure that you can see the rooms from multiple angles and perspectives and that you can determine the flow of the property. Despite your best effort, you can never be 100% certain of the property's appearance without looking at it in person. Think about the property as a long-term investment. Imagine how well suited the property will be for you in the next 8 to 10 years. Looking at the property's potential is also important when creating a list of homes you'd like to see. Don't limit yourself to neighborhoods and areas you know. Your real estate agent might have great suggestions for more affordable areas with hidden gems most people keep overlooking because they are unwilling to compromise on the property's location. Your real estate agent will also guide you in some underpriced properties because unfortunately there are listings online that are misguiding when it comes to pricing. Some listings are intentionally underpriced in the hope of creating a bidding war. And speaking of real estate agents, we have arrived at our next step, which is step number 5, and that is finding your real estate superhero. Step number 5, finding your real estate superhero. You must be wise when choosing the right real estate agent. After all, the real estate agent is not only the person who opens the doors for you at the showings, gives you a tour of the properties you like, and hands you over your keys on closing. Your ideal real estate agent will also write, submit, and negotiate offers on your behalf for the properties you like. Your ideal real estate agent will work diligently in performing a neighborhood and price analysis, including the property's history, to ensure that you're not overpaying for your property or getting a property that has some stigma or has prior incidents. Your ideal real estate agent will liaise with all the parties involved in the transaction, including the agent representing the other side, or the seller in your case, your lawyer, your lender, your home inspector, and your appraiser. Your ideal real estate agent will have a proper line of communication with all the parties to ensure you have a smooth closing with no surprises. Other than working in your best interest, your ideal real estate agent will ensure you get the most value for money for your property. Hence, you need someone experienced and knowledgeable who you can trust to do the job diligently. Here are some tips and guidelines on hiring your real estate agent. Should you hire a real estate agent who is your friend or family? Even though this may be convenient, you will feel like you're helping. It can get tricky if you disagree in certain situations. You'll also benefit more from someone unbiased and straightforward. When interviewing agents, test not only how much they know about the market or how many years they have been in the business, but also find out the number of real estate transactions they have successfully closed. Yes, the number of years experience is important. However, some real estate agents are part-timers or are not producing enough to do the number of transactions that others who are full-time have done. In other words, an agent that does not produce much or is doing part-time, who has worked 10 years and completed 30 transactions, will not have the same knowledge and experience as an agent who has worked maybe half the time or 5 years in real estate, but completed 60 real estate transactions. So you need someone who knows what's happening in the local market, how many transactions they have done, and how to write competitive offers to get you the home of your dreams. And not every agent can deliver this. Second question you might ask about your agent: is hiring a well-known and popular agent really the best option? While it might seem like trusting your home sale process to someone famous and experienced is a good move, it may prove a mistake. How much time can that agent dedicate to finding your dream home if they are in demand? When it comes to agents, honesty truly is the best policy. Don't simply choose the agent who's promising you everything. Rather, go with the realistic agent explaining the situation as it is without any sugarcoating. And always you can Google the real estate agent you are hiring. Next in the buying process is step number 6. And now, yes, it's time to start seeing those homes. Now that you've chosen your real estate agent, it's time to start looking at homes in person. Here are some tips on what to look out for. Most things within a property can be changed. However, location, the property view, and lighting cannot. Focus on the bigger picture. We often get stuck with details we like. However, we must remember the most important thing within the property is its functionality. Focus on that rather than how beautiful the kitchen island marble looks. And create a grading system for the properties you look at. You and everyone involved in the purchase give a grade, for example, from 1 to 5 for each must-have you have defined. This is an efficient way of ranking the properties you see. Write down your first impressions about the home right after you leave it, and ask your agent to hand you a copy of the listing with few photos included, as the photos will help you jogging your memory and will be the most accurate recollection of how the property felt like. Take a non-biased person with yourself who will point out all the apparent flaws of the property for you. If time allows, look at the property at different times of the day to get a feeling of how the light flows into the property at different times of the day. Here's a tip: red flags to watch out for when seeing homes. An experienced agent with many showings and open houses under their belt should be pointing out these red flags for you. However, here are some of the most important occurring issues you should watch out for. The first thing to watch out for is mold and moisture. Especially recently refurbished homes can cover these issues. Look for places like under the kitchen sink or in the back of cupboards for signs of water and mold. The roof is also often problematic. Even if the outside new and looks good, take a sneak peek at the inside and look for issues. Don't forget to look up and down to notice potential problems in the flooring and cracks in the ceilings or in the basement. Now we move to step number 7, which is the offer time. When you have found a property that ticks most of your boxes and you want to put an offer, sit down with your real estate agent and devise a strategy for submitting the offer. This is why it's essential to have an experienced agent transacting regularly. Such an agent knows what kind of offer will be the winning offer, how much above the asking price properties usually sell for, or maybe how much below the asking price you can offer without offending the sellers or simply looking ridiculous. Your real estate agent would have had some discussions with the seller agent to get as much information as possible to start the negotiation process and get you the best price with the best possible terms. Your real estate agent can also help you decide on any conditions you want to ask for. The most common conditions are financing, which means the offer will fall through if you cannot secure the funding necessary for the purchase. And you usually put a time limit to the condition, which is usually 5 to 7 business days. Inspection condition is you get a home inspector to do an inspection, and if there's anything in the report that's not satisfactory, you get to walk out of the deal. Another condition that is used in some instances, and it depends on the market conditions, is the selling of the buyer's property. In case you have another home you want to sell, this is used where you can put a condition so that you're not buying before selling your home. So you put that condition, and the seller can continue to offer their home for sale approximately 30 more days or whatever you have put. And should another buyer come forward with an offer the seller likes, you still have the first right to firm up your offer and keep the home. The next condition, which is usually in condominiums, is the status certificate. A status certificate contains the current state of the condo unit, its financial status, and essential details about the building. If you aren't satisfied with what's stated in the status certificate, you can choose not to go through with the deal as well. It is best to have your lawyer review the status certificate if applicable. Now, besides the conditions, your real estate agent, after discussing with you the strategy, will determine the terms for the offer. Things like the price you want to offer, the deposit you want to give after acceptance, and the possession date or the closing date, and the conditions you want to have. The strength of your offer depends on those terms that you have decided to put, and in some cases, your agent will know which terms to put as a start in the negotiation process. For example, you might want to start with a lower price, but increase your deposit and put a closing date that is not exactly the seller's ideal closing date. So you can leave room to negotiate that later in the negotiation process. Your agent will then present the offer to the seller's agent. The seller will then either accept, reject, or issue a counter offer. You can then accept or continue to go back and forth until you either reach a deal or call it quits. If the offer gets accepted, unless you've made other arrangements in the offer, usually the deposit is payable to the listing brokerage's trust account within 24 hours of acceptance. Now, this deposit amount will be deducted from your down payment. And now, if it's accepted and all the conditions go through, it's time to close on the deal. Which takes us to step number 8. After the seller accepts your offer, you must return to your mortgage broker or lender to complete your financing. The documentation you give will be something like the agreement of the signed agreement of purchase and sale, maybe the MLS listing, the property listing with photos, the most recent property tax assessment, an appraisal, the home inspection report, and things like that where your mortgage lender will ask for. Now, home inspection and appraisal home inspection are two different things. A home inspection is the one you do to assess the property for quality, safety, and overall condition, so that if you're satisfied, you move on with the purchase. A qualified home inspector will assess your property's major items or things such as heating and cooling systems, plumbing, electrical work, water, sewage, fire and safety issues. The home inspector will also look for insect, water, or fire damage. And like I said, you can retract your offer if the home inspection reveals severe defects that the seller did not disclose. The home inspection has to be paid for by you, the buyer, and it costs around $500. An appraisal is an unbiased professional opinion of your home's value done by your mortgage broker or the lender. A qualified appraiser does an in-person inspection and combines the findings with current market trends and the home details, such as the size, condition, floor plan, amenities, and will estimate the value of your home. The transaction can proceed if the appraisal comes in at the value, same value, or above the purchase price. However, the transaction can be stopped if the appraiser comes below the purchase price. That's why it's important to have this condition for you whenever you're purchasing your home. Now, the next thing is you want to establish is the clear title. A title check, which is done by your lawyer, is usually finds if there's any outstanding financial responsibilities attached to the property. Only if the property has a clear title does the seller has the right to sell the property. Title companies checks for claims or liens of any kind. The presence of liens invalidates or impairs the owner's title to the property. And title issues can arise in situations of separation, divorce, or not being adequately documented. And that's why the lawyer will do a title check. Now, a home warranty and a home insurance are two different things. You will be required to get homeowner's insurance before the closing, and this covers contents due to fire or certain natural disasters. You could opt for a home warranty, which is to maintain the systems, appliances for that home, and usually costs between $400 to $800. Now we go to the final step, which is the closing day and the signing at your lawyer's office. So the final signing is usually at the lawyer's office, while sometimes it is done virtually. At this point, your lender will transfer the mortgage money to your lawyer, and you will provide the lawyer with the down payment minus the deposit, plus any money to cover the closing costs, which are usually the legal fees and land transfer fees, which are typically 1.5% to 4% of the purchase price. After that, your lawyer will pay the seller and register your home in your name and give you the deed and keys to your home. And that's it. These are the 9 steps and tips you will take during your home buying journey. If you found this video useful, don't forget to like and subscribe to receive similar videos. Until next video, bye for now, and thanks for watching.